afternoon, mornings, depending on your workstations. My name is Eric Tafak. I'm the interim coordinator for the Partnership Making Finance Work for Africa. And it is my pleasure actually to welcome you to this webinar on the topic, how banks assess climate risks and integrate them into credit risk assessment. This webinar is the seventh of a series of webinars that we have so far conducted under the program, the European Investment Bank TA program for the financial sector in West Africa, in West and Central Africa, that is implemented by IPC, Horus and EICD Consortium. The topic of this webinar is quite itself really topical in the sense that it really demonstrates the urgent need to put financial sector and banks in particular at the center of climate actions in Africa. The webinar will discuss the main climate-related risks that the banking sector could face and approaches for assessing and integrating the risk in lending decision. These risks threaten the functionings of the banking institution as well as the stability of the financial system as a whole. We have an excellent group of speakers who have agreed to share their insight and perspective on the topic, and we are very grateful to them as well as to their respective institutions for their contribution to our activity. Before I delve into the topic of today, this outline, please move next session. Next slide, please. This slide shows us how the session will unfold. We will start with sharing practical information, then quick overview on making finance work for Africa before introducing the panelists that will run through the presentations. And finally, we'll have a Q&A session. Next slide. Okay, in terms of practical information, we say that this webinar will last for about 1 hour and 15 minutes, including the Q&A sessions. And we have muted all the microphones for a better comfort of the sessions. Q&As, the question can be submitted through the Q&A box. And you also have a chat box that appear in the bottom, where you can also contribute by sharing your own ideas. Simultaneous translation will be made available from English to French and French to English. The slide and the recording of the webinar will be distributed at the end of the session. And if you have any challenges really to connect to the platform, do not hesitate really to send us an email. And finally, we invite you to complete the questionnaire that we have here at the end of the sessions, so that we really value your feedback, and we always use that to improve the quality of our webinars going forward. Next slide. Very quickly on making finance work for Africa, I would say that it's a platform for facilitation and harmonization of initiatives that are related to financial sector development on the continent. It is hosted by the African Development Bank. The secretary actually is hosted by the African Development Bank in Abidjan. Our mandate is actually to unleash the potential of the African financial sector to drive inclusive and sustainable economic development on the continent. And we usually use as the main tools the advocacy, knowledge management, and networking. We work along 4 main streams that are inclusive and alternative finance, banking and sustainable finance, trade finance, and long-term finance. You have on the screen the main donors that are really contributing and supporting making finance work for Africa. These donors are, in addition to the African Development Bank, we have Afrexim Bank, the European Investment Banks, and the EU's, and the Agence Française de Développement. We are grateful for their continued support to making finance work for Africa. Next slide. On that, I will now introduce you Mrs. Karina Duncan. Karina will be the moderator of the sessions after a brief introductory remark by Mr. Jane Freeman. Karina is the Director of Green Finance at IPC. She has a wealth of experience in that field. I'm sure that she will really be the right person really to help get the valuable insight from the panelists so that we have a very productive session. Jane Freeman is actually the EIB regional, the head of the EIB regional office in West and Central Africa. Jane has a very extensive experience in the field of development and development finance, and she has been very supportive to the activity of Rethink Finance of Africa and the work that also the program that EIB is implementing in the West and Central Africa region. I would then now invite Jane to give her a quick introductory remark before we hand the floor to Mrs. Karina Dunker for the moderation session. Jane, you have the floor.
Thank you, Hugues. Good afternoon, ladies and gentlemen, or good morning, depending on where you're located. I hope you can all see and hear me okay. I will speak in English this afternoon. I'm seeing the questions in the chat asking if we will be speaking in French or in English. I'd like to thank our interpreters who should be plugged in now and helping you to understand this if you prefer to speak in French. I will speak in English today. So it's a real pleasure to provide some introductory words on behalf of the European Investment Bank for this webinar this afternoon. My name is Jane Feehan. As Hugues said, I'm the head of the European Investment Bank's West Africa representation based here in Abidjan. I will say a few words about the EIB's overall approach to climate action. And then I will share with you some points on how we ourselves tackle today's topic. So how we in the EIB ourselves are looking at assessing climate risks and integrating those risks into our work to give you some insights into how we handle this ourselves in-house. So firstly then, our overall approach to climate action. We in the European Investment Bank have been working very hard to align fully with the Paris Agreement on climate action, which all of our shareholders have signed up to. And we have approved a climate bank roadmap running until 2025, which has a number of important commitments which we are now putting into place. We have a target, a 50% target, that half of all of our lending should go towards climate action and environmental sustainability projects by 2025. And we're on track to meeting that 50% target. Last year, 2021, we reached 43%. And that amounts to 23 billion euros of financing for climate action and environmental sustainability projects. That makes us a leading financier of climate action worldwide. So two areas of focus for us at the moment are firstly on adaptation, because in recent years we've done a lot on mitigation, so on financing projects which reduce greenhouse gas emissions, but we have not been doing enough on adaptation, and we want to triple our adaptation lending in the years ahead. And in this sense, agriculture is extremely important and Africa is extremely important. So you will be hearing more from us as we work in that crucial area of adaptation. Another area where we're trying to work harder is on working with our counterparties, working with the companies that we're financing, to work with those counterparties to adopt and implement decarbonization plans. So we call this our alignment for counterparties work. So that's also an important additional effort for us at the present time. And I see in the chat I'm being asked to slow down a little. I will do that. Thank you to our translators. That's the overall approach then on the EIB's work in climate action. So on today's topic then, assessing climate risks, integrating that into our work. Climate change poses risks to our cities, to our agriculture, to our economies. As a responsible financial institution, we need to assess and to manage those risks. This is part of sound banking practice for all banks, and we're no exception. And in doing that, we distinguish between two types of risks. Firstly, the physical climate risks. So the risks associated with exposure to climate change impacts. And on that, we don't need to look far to see many examples of the devastating and tragic impacts of, for example, extreme weather events around the world. Last year, we had many devastating examples of flooding, droughts, heat waves, fires around the world. And the link between these extreme events and climate change is a link which is well understood now. So physical climate risks, and then the other types of risks which we are looking at are transition risks. So here we're speaking about the risks associated with as economies decarbonize, some assets may become stranded, some businesses may become obsolete, some businesses may be left behind by a changing market. Transition risks. So on that, in fact, it's interesting to note that last year, the European Central Bank published a review of 112 financial institutions in Europe and their approaches to managing climate and environmental risks. And this review noted that almost all of these institutions expect climate risks to have a material impact on their risk profile in the coming 3 to 5 years. So short to medium term, very real. But, the big but, very few of these institutions have yet put in place risk practices with a real impact on their strategy and risk profile. So the review concluded that most institutions have a blind spot, as they said, a blind spot for physical climate risks. So what we're seeing there is that there's widespread recognition that as financial institutions, we see the problem, but many of us are not sure how to really integrate that, how to really manage that assess and manage that risk in our work. So what we in the EIB have done is we have rolled out a climate risk assessment system since 2019. And within this system, we have 3 steps. Firstly, all new investment projects that come to the European Investment Bank are screened at appraisal stage for their climate change vulnerability, right? So screening for vulnerability, that's the first step. And the second step is then to engage with those clients to support climate risk and vulnerability assessments. So that's the second step, to do an in-depth assessment where it's needed, right? And then the third step is to where we can, to finance the costs associated with adapting to those risks that have been identified in the assessments. So this climate risk assessment system has been rolled out now. It's a big job because we're a big institution. We're doing between 70 and 90 billion euros of lending a year. And as I said, this system is applied to everything we do. So I hope that some of what we are learning with this work can help to inform our sister institutions in rolling out some of the same practices. Because, and I'll conclude now, ladies and gentlemen, because we're not alone in this. It's very important to share experience, and it's important to share not just what's working well, but also what's not working well. To speak about our failures, to speak about what could be improved, and it's in that spirit of sharing of best practice that I am very much looking forward to today's webinar. I'd like to sincerely thank the organizers, and I'd like to thank everybody who's joining us today for this interesting event. And that's all from me, over and out from Abidjan. Back to you, Uge. Thank you.
Thank you so much, Jane, for these very enlightening introductions. You actually really set the scene, and it's also very good to put give that big picture, that participant to know exactly what is happening at the level of the European Investment Bank. Next slide. Yes. So as I said in the introductions, actually, we are running this webinar in the context of this program, the Technical Assistance Program for the Financial Sector in West Africa and Central Africa. That is funded and really supported by the European Investment Bank. It really targets institutions that are essentially what we call the SME banks, that they have a focus on the banks that have a focus on the MSME, and also microfinance institutions. I mean, the objective of the program is actually to improve responsible financial inclusions by creating, as you can see, access to medium and long-term finance for MSME and through loan and TA. Is there for a while, I think more than 1 year. It will continue, and we really thank the EIB for this support to the financial sector on the continent. On that, I will hand over the floor to Karina Duncan, who is our moderator for today's discussion. Karina, you have the floor.
Thank you so much, Uge, and also thank you so much to you, Jane, for this, for setting the floor so greatly. If you perhaps can have the next slide then. So just for those who have perhaps joined us a little bit later, the title of our today's webinar is How Banks Assess Climate Risks and Incorporate Them into Credit Risk Assessments. And I'm very happy that I will be here this afternoon with you in discussing and elaborating this super exciting topic further. The next slide, please. I will be joined here today with three great experts. With some of those I had already the pleasure of working. And so there's on the one hand Gerhard Mulder of Climate Risk Services, the founder of the very same company and an expert not only in climate finance, but specifically in the integration of climate risk in the financial sector. We have Herman Komoe, who used to do a lot of research and deep insights on the physical climate risk, specifically on the agricultural sector. As per education, he is an agronomist, and we will be looking forward to hearing more how specifically also farmers in the African continent are affected already by climate change, and what perhaps financial institution can really do in order to support, to adapt those farmers, but also to make their portfolios a bit more resilient against those physical climate risks. And we have here Marc Dobré, and climate finance expert as well, and CEO of Green Invest Africa, who will enlighten us a bit on how exactly you could really enhance your processes and actually conduct the assessment of what type of climate risks, those which we would call the transition risks, and also the physical risks within the portfolios. And I'm very much looking forward to discuss all these interesting points over the afternoon and the next hour we still have today. If we can have the next slide, please. And I promise I will be very short, but I also realize that quite some have joined us later to perhaps quickly explain what also and visualize a bit what Jane has mentioned before. We need to build a climate resilient global society. I think there is no doubt. Climate is changing already, and we would like to keep the in temperatures express the change to maximum 1.5 degrees, but that already means in some of the parts we have to adapt to those changes, and on the other hand, we still have to mitigate climate change in order to really keep this to the 1.5 degree. And if we could please click one further. And the financial sector here is playing a super important integrator role, because on the one hand, they have to make sure that also in future they will have healthy portfolios. So they will have to address those physical risks, like, do I have assets which are endangered by flooding? Are my farm clients really prepared to deal also with droughts in their portfolios? And on the other hand, they will also have to address the transition risks, like making sure, are my clients really prepared to the changes in policy which they are asked for? Are my clients already meeting the new energy performance standards really? Do I have still perhaps clients who are in the fossil fuel sector? So what is happening in my countries in this sector? So all these things need to be addressed. And with this, I would like to hand over to Gerhard, who will be our first speaker. The next slide, please, Alain, or please one further. On how financial institutions should address those, and why is this actually so important? Please, Gerhard, over to you.
Thank you so much, Karina. Thank you, Hughes, and thank you, Jane, for all the wonderful and introductory comments. Good morning and good afternoon. Greetings from Amsterdam, the Netherlands. We are about 3 meters below sea level. So climate change is a real topic here. What I'd like to do today is to run you through some basic slides and provide you with some understanding on how to integrate climate change into the processes of financial institutions. So perhaps I can ask for the next slide, please. Let's first ask ourselves, why is climate change and climate risk important? Because many of you already have spent time, for sure, on looking at climate change. But traditionally, the way financial institutions are looking at climate change is the impact of the company on the climate. We look at our CO2 emissions, we look at how we're impacting our environment, etc. And that is, in a way, environmental and social materiality. And very often, the work that is done on climate thus far in financial institutions, and this is not just in Africa, this is everywhere around the world, lies with the CSR department. This is about being a good company. But what is different today is that the climate is now having an impact on the company. So it is now changing. And this is financially material. You as a financial institution are probably sitting on risk that you currently haven't identified and therefore also are not being compensated for. And this is why climate risk is a financial material issue. It should ideally not belong in the CSR department, but it should be squarely within the risk column of the bank. So ultimately, it should be the CEO or the Chief Risk Officer who is responsible for overseeing how climate change is integrated into the organization. The next slide, please. I have to say, though, that climate change creates both risks and opportunities. We work with financial institutions, but we also work with mining companies, for example. And a lot of mining companies today will benefit greatly from climate change because they are supplying the minerals and the metals that are needed for the transition to a low carbon economy. But today I'd like to talk mostly about the risks. You already heard it before. Those risks come in two forms. I will not spend too much time on that. Directly through the increasing climate hazards, such as the storms and the heat stress, but also indirectly through increased regulation. Next slide, please. There is also a fairness issue when it comes to climate change, and we should not forget that. The countries in dark red and lighter red are the countries that are mostly responsible for causing climate change. The countries in green and in orange are the countries that are mostly going to suffer from climate change. The picture on top shows what the situation is today, and you see that this is worsening over time. In this case, a bit misleading perhaps, but green means that's more trouble for you. That raises some really profound questions about fairness. And as a result, and in response to this, international negotiators also negotiated what they call the Copenhagen Pledge to mobilize climate finance to those countries that need it the most. And the EIB is actually a good example of mobilizing that kind of finance. Next slide, please. Just wanted to give you some thoughts about how financial professionals are now looking at climate change, because don't take my word for it, but perhaps you want to listen to some of your professional colleagues, such as Larry Fink, for example. He is the CEO of BlackRock, which is the largest asset owner in the world, something around 9 or 10 trillion US dollars under management. Every year, Larry Fink, previous slide, please, yes. Every year, Larry Fink sends a letter to his companies that he's investing in. And he has been very, I would say, embracing the issue of climate risk. It is the biggest topic of his last few letters. And he says climate risk is investment risk. And he's now calling every single company that he's investing in. And he wants to know, what are you doing to mitigate these risks? What are you doing to transition to a low carbon economy? Next slide, please. Importantly, for the kind of work that you are doing in financial institutions, we need to rethink risk when it comes to climate change. Climate change is not your standard bank risk. Climate change is different for a variety of reasons. First of all, it could be low probability, but an extremely high impact event. So it's not your standard, distribution of risk, if you like. And the old way of approaching this type of risk isn't going to help you going forward. The Bank for International Settlements, I'm sure you know, the central banks of central banks, basically says that the probabilistic and backward-looking risk management approaches that you have been accustomed to for probably most of your career is not going to help us when managing climate change. Because there's also the irreversibility of climate change. Once we reach certain tipping points, there is no bouncing back from climate change. If we don't bend the curve in the next 10 years or so, we're going to have runaway climate change. We bounced back from the great financial crisis. We bounced back from COVID. There's no bouncing back from climate change. Next slide, please. really important to understand for you, and this is a picture from a Basel, a publication from the Bank for International Settlements, the Basel Committee on Banking Supervision. They put out some really good reports to explain to you on how physical risk and transition risk, which already has been explained, is impacting the existing risk categories of the bank. And that could be through microeconomic risk channels, such as direct impacts on your clients, but also through the macroeconomy. For example, let's say that you have a major drought that pushes up food prices, which could create inflation, which pushes up interest rates, etc. So the important message from this slide then is that climate change should not be treated as a new risk category, but rather as a driver of existing risk categories. And one thing that you can do is basically to start mapping your own risks, physical risks, transition risks, through these transmission channels, through your clients, through your own situation, and to see how that impacts credit, market, liquidity, etc. risks, your existing risk categories. I'll start wrapping up. Next slide, please. Really important to understand, this is complementing what has been said before. You have physical risk, you have transition risk, and everybody looks at this as a nice, neat trade-off. Either we accept a lot of transition risk today, go through the pain of transitioning to a low carbon economy today to avoid the worst physical climate risk in the future. It is either that or go easy on ourselves and the economy. But in that case, you will see a lot of climate risk, physical climate risk in the future. I don't think this neat trade-off exists. I think right now, there's so much climate change already locked into the system that in a worst case scenario, we will have both a lot of physical risk, but also transition risk. The big question is not, are we going to transition to a low carbon economy? The big question is, when are we going to transition to a low carbon economy? And will that transition be an orderly transition, or will that transition be a disorderly transition? But there's very little choice that we have. At the end of the day, we all need to move to net zero. And we cannot have a climate resilient economy without a climate resilient financial sector. Because the financial sector decides what gets funded and what does not get funded. So you have to move along with what is happening on the macro level. And I think this is exactly why the EIB is now stepping in, for example, and is providing a lot of technical assistance to help you in achieving that goal. Thank you very much.
Yeah, thank you, Gerhard, a lot for this introduction about why financial institutions should care about climate risk and what actually in the end they would need to address when caring for climate risks. We have one interesting question, which I still would like to take now before I hand over to our next speaker, Herman. There is a question in the chat asking, like, is there a law prohibiting the financing of activities that cause greenhouse gas emissions? And perhaps, Gerhard, it's interesting, I think, because the answer is a clear no, but I guess you could enlighten us a bit why logically there is no such law in place, but what perhaps law can do here. And if we can be brief, that would be good. Thank you.
I will be brief. Thank you. You're exactly right. There is no law that will prohibit anyone from financing fossil fuels, etc. But what you see is that the whole ecosystem of stakeholders in place is moving in the same direction. That includes, for example, central banks and regulators. They now want to know in many jurisdictions, and Jane already mentioned the work of the European Central Bank, what are you doing to identify and manage these climate risks? And the thinking is going that investing in the fossil fuels is a high risk business. At the end, you may still be able to finance the fossil fuel industry, but you will need higher capital adequacy, for example, higher capital rules, to finance that, because it is considered high risk. So there's all kinds of stakeholders that are moving into that same direction, but there will be no law that will prohibit you from doing so. You may be shut out of the capital markets though, because the banks of the EIB, multilateral development banks, etc. In the future, you will simply not be able to get access to capital if you keep doing this, particularly if it is really part of your core business.
Thank you, Gerhard. Very helpful. I saw that there is another question in our Q&A already, which I would like to postpone a bit, if you don't mind, because you have a dedicated speaker on especially those topics, and perhaps the one or other point will be addressed already. And for those who joined us a little later, feel free to use the chat or ideally the question and answer button below here to share your questions for our discussion later. And with this, perhaps the next slide, Alain-Stéphane, please. I would like to hand over to Herman, who would speak about the physical risk side and how financial institutions could address those. Herman, over to you, please.
Thank you, Karina. Thank you to the whole speakers and the participants. It's also my pleasure to be here to bring a bit my experience on the ground, mainly focusing on the physical risk related to the agricultural sectors. So yeah, during the next few minutes, I will briefly present what we have been, implemented and working within our collaborations in the agricultural sectors, with the financial sectors, to the climate, physical climate risk. So next slides, I will briefly start my talk on giving a brief overview on how vulnerable our climate, our continent, Africa mainly, is vulnerable to climate change, mainly when we talk on the agricultural sectors. And then, due to this vulnerability, a lot of approaches have been developed on how physical climate risk could be assessed and also be integrated to the process of lending the business in agricultural sectors. So I will introduce a few of the approach that we have been used on the ground, and then has addressing the climate risk is not only on the credit procedure, but we have also the way where financial institutions also could support the sectors on the adaptations and also mitigations strategy from the smallholders farmers. And finally, I will give some lesson learned from what we have been get out of this work on the ground. Next slide, please. So basically, as my previous speakers already mentioned, climate change is really a big issue currently, and mainly for the African continent. The continent is the most vulnerable, to climate change impact under all climate scenarios above 1.5 degrees Celsius. And when you look at across the whole Africa, and particularly in the western, the central and the eastern part of Africa, they are the most vulnerable when you look at globally. So climate change will be translated into, increasing frequency and intensity of, drought and all these extreme events within the continent. And as we have already seen, the key development sectors have already experienced widespread loss, but also damage due to climate change that has impacted health, livelihood, but also food security of people across Africa. When you come more specifically to the agricultural sectors, what the latest report from the International Panel on Climate Change has been identified is that the continents, most specifically for the agricultural productivity, growth has been reduced by 34% since 1961, mainly due to climate change. So when you look at also the projections for a coming year, when it's come to to global warming, it's also expecting that Africa will see a very reduction in the growing season, but also an increase in terms of water stress, water scarcity within the continent. For the bank working more specifically in this context of Africa and mainly with smallholder farmers, climate risk are becoming, I will say, a growing challenge to the activities to be addressed. So yeah, taking measures and addressing the vulnerability of the borrowers or the smallholder farmers becoming very key for them. As we can see, the impact will not only see on the staple crops, but also on the tree crops. When you make a projection of more than 1.5 and 2 degrees Celsius scenarios, we will see in almost all the continent a really impact on the productivity, so the yield decrease within the continents. So here, I just want to give you a very short example of a study that we are currently conducted in West Africa, in Ghana, on the tree crops sectors, mainly, for instance, on the mango sectors. We have been going into the fields and assessing how vulnerable the sectors is related to climate-related hazard. And what we have also notified, and previous study also confirmed that, is that the smallholder farmers within these sectors already perceive and have been impacted by pest and disease, but also a real decrease in terms of water availability for the activities. And all these factors lead to a very impact in terms of decrease of the production, but also the quality of the fruit. Next slide, please. So basically what we have been observed working with the financial institutions is that we have one way to consider this physical climate risk, to assess them, and also to integrate in the decision-making process when it comes to approve a loan or not. Here I would like to present two main approaches that we have been working with banks and financial institutions on the ground. The one on the left-hand side, we call it the dashboards and portfolio analysis tool. For this, mainly for this approach, we have two types of assessments that we have been conducted for this institutions. The first one, as we need to have like a broader overview of how the vulnerability of the portfolio is. We have to look at the country level. So all the country operations area for the bank should be assessed to see where we have a key vulnerability, where we have the main probability of drought, the main probability of food and so on. So for that, we have been focused on most, we call it incremental changes. So look at the temperature, the rainfall, the sea level rise, but also what we call it very acute changes such as droughts, which is come like once and then. So we have selected all these parameters, indicators, and at the country level in order to make a comparison between countries when it comes to climate and physical climate risk. So from the bank side, they have a dashboard that we can compare vulnerability, in terms of indices related to the vulnerability, in terms of very specific physical risk, and compare which countries of operation is more vulnerable compared to others. This is the country level, but we need also to move a bit at the disaggregated level, so going more at the portfolio level, where we have to see, the client's data, at the same time also the geo-coordinate of the client, so that we can have a map with the climate models and the crop models to be combined, and then see which client is being affected currently by this physical climate risk, but what will be also the projections when you use the climate model in the next 5, 10, and 50 years. So we have at a global level where you can have the dashboard to see the country, but for the agri portfolio more specifically, we have made some very specific analysis focusing at the client data level to see on the map exactly where we have a yield anomaly, where we have a temperature or rainfall impact. So that was the first, I would say, dashboard and portfolio tools that we have also worked with bank, so that they could use it in the decision process when it's come to addressing physical climate risk. And then the second approach on the right-hand side is what we call it the integration of whole climate vulnerability assessment procedure into the environmental and social management system. So what is exactly an environmental and social management system? It's just simply a set of policies, procedures, and tools that has been put together in order to identify, to assess, but also to manage environmental and social risk of financial institutions, on the daily operations. So we have already, for most of the financial institutions we are working with, those have this system in place, those nodes, but the most idea for this approach is that how we can integrate the climate vulnerability assessment within the already established procedures. This comes because a lot of DFIs, development financial institution or investment bank, mostly requiring to integrate the climate-related aspect consideration within the environmental and social management system. Mostly, we are working also with EIB banks in East Africa, where these standards for which is related to the climate-related aspect should be considered when we make the environmental and social management. So we have been developed from the screening and categorizations procedure, but all the due diligence, we have put together some vulnerability assessment templates and checklists that also integrate to the current procedures, so that we can see exactly for a very typical investment if it's vulnerable to a very specific weather conditions, if there is already some adaptations or mitigation measure already in place, if there is some lack in terms of addressing physical climate risk already on place. So this process is quite new, and we are working mostly closely with officials, credit officials, but also with environmental and social management unit within the bank in order to smoothly integrate all these climate consideration into the current systems. So yeah, let's move to the next slide, where addressing physical climate risk will not only set up on the credit procedure, but where we have also the way where a financial institution also could support. I think Jen also already mentioned the intention or the goal of the EIB, for instance, to support locally, the banks, but also the small scale other farmers in order to increase, to strengthen their adaptive capacity, in order to give them, the possibility also to pay back the loans and become more resilient to the current situations. So still in Ghana, the study we have been conducted, I just present a few adaptation measures that we have been identify, assess on the ground, but also mitigation measure already in place that could also be required financial institutions support. When we come to adaptations, mainly for the cocoa sectors in Ghana, but also on the West Africa, Cote d'Ivoire, for instance, we have already some adaptations strategies in place in order to deal with the current impact of climate change. Methods, like miscropping or intercropping, or making the crop rotations have been already implemented by smallholder farmers on the ground, and should also be require financial institution more support in order to strengthen the production system. But when it comes to reduce the footprint, the carbon footprint, reducing the greenhouse gas emissions, we have worked also with the smallholder farmers. And what we have been seeing is that practices like agroforestry, which is the combination of the cocoa plantation with trees and also livestock, that is the definition of agroforestry, is already in place, but need further support from the finance sectors, and techniques like mulching or reducing slash and burn practices in order to preserve the forest and conserve the biodiversity of the country is really key, and also should be also supported by the financial institutions. Apart from this study case, next slide please, we have also identified other adaptation and mitigation measures, even in agricultural sectors, but also in the energy sectors, the water and sanitation, transportations, or these measures that could be further support by the financial institutions. When it comes to agriculture, now we are talking more about more efficient irrigation systems, and moving more to more resilient varieties, resistant to waters, and also water stress, and all these agricultural, smart agricultural practices that could be put forward by financial institutions in order to strengthen the sectors. When it comes to the energy, waters, and all these transportations, we have now more and more strategies like using solar panels, collecting rainfall reservoir in order to use them when we found water scarcity. So all these adaptation measures are already on the ground and need also further support from the institution and the financial state. And yeah, I will move to the next and last slide to just present a bit of what we have been, can take away from what, working with the financial institutions, the agricultural sectors, but also with the physical climate risk on the ground. The thing is that, this assessment of the physical climate risk, but also integrating them to the credits procedures is quite new for both of the institutions we have been working with. And when it's come to putting all these things at country level and also at portfolio level, it needs sometimes some very, I will say, complex climate and crop simulations models, which also need some quality and quantity of input data. So it will also require, I will say, some technical skills also in order to manage all these, this climate and crop simulations. The key issue is also that we do not have currently like a common standard on how to assess and to address physical climate risk, and then everyone could, according to his capacity and his skills, adapt the approach to their own business. And when it comes to integrating the physical climate risk to the environmental and social management systems, it's also a new approach that will be, put forward and still, pushing by technical assistance to the banks in order for them to really integrate this assessments, this climate vulnerability assessment within the current procedures. And last but not least, we have also identified during the interaction with the banks that another potential insurance solution could be what we call it parametric insurance, in our term index-based insurance, mainly for the African context. It's simply a kind of insurance really focused on index-based and not the traditional way where the coverage could be excess of rate or drought, and as soon as the index is is triggering according to a very specific climate event, it will automatically pay out. And for this, we have two main options. The first option could be from the bank side, where they can contract insurance to cover the agri portfolio more specifically. The advantage is that it's low rates, low administrative costs, but the only disadvantage is that it's only the bank who is cover its portfolio, but the smallholders, which is the credit takers, is not covered in case of bad weather events. And the second option is the option where each individual farmer is obliged to to have access to an insurance and products before being allowed to have access to the credit, so that it would help each individual farmers to be covered in case of extreme events. The advantages is that farmers will be paid out every time we have a bad weather, but the disadvantages is for an approach that we need to have a very single contract for thousands and thousands farmers, so it increase the cost in terms of administrative management. So yeah, that is basically what I would like to share with you, and yeah, look forward to any open question that I could.
Yeah, thank you, Herman. And indeed, there are a lot of questions being already in the chat, some already of more a discussive character, and also a lot of questions on how the EIB can actually provide support. But perhaps before we go and continue the discussion part, I would like to hand over to Marc Dobré at this point, after we have heard so much about the why this is important for financial institutions to take care of, and how actually clients are impacted, to also present more on how actually the risk, and that was one of the questions, and opportunities can be addressed through tools, perhaps. Marc, please, over to you.
Yes, thank you, Karina, and good evening or good morning, everyone. I would like to have to apologize because I would have first to have my presentation as a bilingual presentation to balance. I know that in the audience we have French, we have English and French speakers. But this bilingual presentation will start with the first slide in English and the other one in French. Also, I would like to apologize because definitely I will be approaching our concern out of the box, not only in terms of physical risk and transition risk, but in terms of practitioner, day-to-day practitioner, dealing with SMEs on the ground, dealing with banks on the ground, and liaising banks and SMEs. Next, please. So I will do it within three main items. The first one will be to share with you the rationale, the specific approach, then the challenges and realities on the ground, and end with solutions and perspectives. Next. And when approaching out of the box this triptych, risk, climate, credit, I would like to do it from the SMEs perspective and the green SMEs perspective, because we consider that at the end of the day, if we want to talk about risk, climate risk for the bank, we also need to look at climate sectors and activities. Also from SMEs, because as you know, in Côte d'Ivoire, but most of the country in West Africa and all over Africa, SMEs are the main component of the economic activities. In Côte d'Ivoire, for example, they account for more than 80% of the economic activities. So this is why, from our perspective, from Green Invest Africa, we've been working on a day-to-day basis on the nexus of finance and climate. We consider that climate risk, climate challenges are real, but they are also opportunities. And we consider also that finance and access to finance are the means and tools to accelerate and catalyze these opportunities to be seized by African companies and African communities and people. And this is the nexus we are working on. We consider that at Green Invest, we're working also on practical solution, innovative solution, and this is also how we want to contribute in this discussion. Usually, you can have the internal analysis from the bank in terms of risk and the internal rules and regulation with the ESG approach, with the TFCD, for example, in Europe. But also we consider that as a bank, and when talking about credit and finance, you have the supply side and you have the demand side. And the demand side is very crucial. If you have a portfolio, if the risky portfolio, then it's also a very relevant way to address the climate risk. And this is why we want to also look at the client relationship between the banks and the SMEs. The idea is also maybe to identify the main sectors where the most of the green SMEs or greening SMEs are working on, because they are the climate main climate sectors. In West Africa and even Central Africa, the first priority sector now is related to forestry and agriculture, what we call AFOLU. And it's good to know that, because it could also mean that most of the risk analysis and risk approach has also to be considered in that perspective. The second sector is the energy, but when talking about energy in climate, you consider the renewable energy, energy efficiency, transport, building, housing, and the last one is circular economy and sustainable waste management. So it is within this arena that we are going to look at the specific risk approach from the bank in line with his client. We've been supporting more than 100 SMEs and working with more than 10 banks, local banks, but also international guarantee funds. And the idea is to develop tools and mechanisms to make access to finance and taking into consideration the risk, climate risk, making this access to finance easy for green SMEs. We did it through the green cluster SMEs Green Cluster, but we also did it, and we've been doing it with the Green Hub SME program. Next, please. Next. Next slide, please. Okay. So on the ground, what the banks are telling us, and when supporting the SMEs and on the SMEs point of view, we can consider that they usually say that there are technical risks, the credit risk as usual, the market risk, the liquidity one, and also the operational one. But there is one who is also emerging, which is the environmental and social risk that banks are taking more and more in consideration, and they are putting in terms of guidelines, in terms of criteria to analyze the portfolio and the SMEs. Then we are also looking at the credit approval criteria. When we have these credit approval criteria, the banks are telling us, first of all, we need to look at the admissibility. And if you don't mind, I will go to switch to French now. Donc c'est la recevabilité. La banque nous dit, écoutez, avec les PME, comme avec les autres clients, nous avons des critères de recevabilité. Et dans ces critères de recevabilité, la banque regarde les aspects légaux, les aspects juridiques, mais regarde aussi surtout l'expérience et les références techniques donc, de l'entreprise et des PME, regarde aussi la moralité du dirigeant et regarde bien sûr la disponibilité donc, des états financiers. Un autre niveau, ce sont les aspects purement financiers. Et sur les aspects purement financiers, la banque nous dit, écoutez, nous, c'est vrai que certains investisseurs regardent le taux de rentabilité interne, regardent donc la valeur actuelle nette, mais nous, ce qui nous intéresse surtout, c'est la capacité de remboursement. Parce que nous voulons être sûrs que le client que nous avons va pouvoir effectuer donc, son remboursement de façon certaine. Et elles nous disent aussi qu'il faut mettre en avant donc, le ratio d'endettement donc financier. Elles nous disent regarder aussi le cycle de trésorerie. Et elles considèrent aussi que la structuration finalement des flux attendus de remboursement quant à la contrepartie est un élément clé. Et puis enfin l'analyse concurrentielle ou l'analyse de marché qui va leur permettre d'appréhender la profondeur d'un marché et la perspective d'un marché aussi en termes de profitabilité. À la fin de la journée, deux choses sont importantes, le risque et le profit. Mais on a dans notre interaction avec eux tous les jours, ils considèrent quand même que les PME, surtout les PME liées donc, au secteur du climat, donc que ce soit les PME vertes ou les PME verdissantes qui utilisent les technologies ou qui les déploient, les technologies vertes comme les technologies en termes d'énergie renouvelable et d'efficacité énergétique, pour ne prendre que cet exemple, elles nous disent qu'elles ont quand même une très faible connaissance de ces secteurs. Et l'idée, c'est que le risque, qu'il soit d'appréciation interne pour la banque ou qu'il soit par rapport à un client pour le crédit, ne pourra être vraiment appréhendé que lorsque la connaissance de ces secteurs sera améliorée. Et c'est donc un élément clé pour nous de renforcer justement les capacités des banques en termes de connaissance de ces secteurs avec la mise en place de benchmarks qui puissent permettre à la banque donc, de facilement faire des évaluations donc, rapides. Elles nous disent qu'il manque aussi d'éléments d'appréciation de ce risque, des outils d'appréciation de ce risque, et que souvent, elles ont affaire finalement à une faible solvabilité de ces PME et parfois à une absence de garantie. Alors, sur les garanties, nous reviendrons sur ce point parce que l'absence de garantie pour elles n'est pas toujours le recours à un fonds de garantie, mais sur ce point, nous reviendrons. Et puis enfin, on va dire l'inadéquation entre les besoins de l'entreprise et les modes de financement, qu'il s'agisse de crédit donc à court terme, qu'il s'agisse de découvert, il y a donc là une inadéquation. Et enfin, donc l'insuffisance de performance et de non-remboursement. Alors, l'idée, c'est de dire qu'à partir de ces risques que les banques nous présentent concernant les PME et concernant donc les secteurs de l'économie verte, on peut considérer que il existe quand même des solutions, ou en tout cas des pistes de solutions. Next, please. La prochaine slide. Et c'est en capitalisant justement sur toute cette expérience et sur finalement le feedback et le ressenti des banques qu'elles-mêmes nous ont engagés à mettre en place un dispositif qui peut être considéré un peu comme un paquet de solutions. D'abord par l'utilisation donc de la garantie et des outils de de-risking. Et j'en parlais tout à l'heure. Certaines institutions donc, et de garantie, notamment africaines, sur le continent africain, mettent en place soit des garanties de portefeuille, des garanties individuelles, mais les banques parfois nous disent que ce n'est pas suffisant. Et donc les banques veulent engager le porteur de projet, le promoteur, à lui aussi mettre en place certains dispositifs donc, de garantie. On considère quand même qu'un gros travail a été fait sur justement ces outils de de-risking et de garantie. Mais ces outils de de-risking et de garantie vont aussi parfois avec des facilités, pour ne pas les nommer, mais des programmes notamment sur les énergies renouvelables, Sunref, qui appuie et qui conforte les banques dans la mise en place justement non seulement d'éléments de garantie, mais surtout aussi de conditions concessionnelles pour que justement le financement puisse se faire dans des meilleures conditions, donc, ou meilleure appréciation du risque. Et les banques nous disent aussi, OK, la garantie c'est une chose, mais nous voulons que les acteurs et les PME soient assistés, accompagnés, appuyés, encadrés. Et donc là, c'est là tout l'enjeu de l'accompagnement, avec le renforcement des capacités, la formation, le coaching, le mentoring, et tout ça conduit à un monitoring avec un outil que nous allons vous présenter à la fin, qui permet donc de conforter la banque et de donner encore plus d'éléments justement de garantie par rapport au risque que peut représenter la PME et la PME verte. Il y a aussi des outils que nous utilisons donc de financement mixte, avec non seulement la combinaison de subventions avec des lignes de crédit vertes, etc. Et enfin, l'idée, c'est de dire que l'exposition au risque climatique peut être réduite dès lors que l'entreprise elle-même s'engagera dans une trajectoire bas carbone. Et s'engager dans une trajectoire bas carbone, ce sont des outils avec justement l'élaboration de la baseline, avec l'évaluation de l'empreinte carbone. Et tous ces éléments concourent à apprécier et à mitiguer ou à réduire donc, le risque. Et l'outil, next please, l'outil que nous avons mis en place avec certaines banques, mais qui est encore en cours de développement, est un outil qui prend en compte un certain nombre d'indicateurs et qui permet donc, à partir de ces indicateurs, d'avoir une appréciation donc, de la vulnérabilité entre guillemets, de la PME et du risque que peut représenter la PME, avec donc une checklist que nous avons, avec une évaluation des critères, avec un dashboard que nous avons mis en place. Et à la fin de la journée, ce dashboard nous permet d'évaluer chaque entreprise sur un niveau de risque, qu'il soit donc modéré, critique ou très critique. Et l'idée, c'est que cet outil est en train d'être consolidé pour pouvoir justement faire l'objet de reporting avec les entreprises vis-à-vis des banques, les entreprises qui sont engagées dans des processus donc, de financement et d'accès au crédit. Ce sont donc quelques éléments ou quelques outils, des pistes de solutions que nous développons. Oui, j'ai une question sur laquelle on reviendra concernant le dashboard aux SMEs. Nous avons convenu avec les banques d'aller par étapes. Nous considérons que les PME, et les PME vertes en particulier, peuvent faire l'office un peu de pilote. Et dès lors que cet outil sera suffisamment rodé et sera suffisamment pérenne et avéré, l'idée est de regarder comment l'étendre aux autres types d'acteurs. Et la banque nous a dit elle-même que c'est un outil qu'elle souhaiterait même utiliser pour elle-même. Donc des réflexions, des approfondissements sont en cours. Et je terminerai pour dire, pour la traduction française, il n'y a peu de... donc je terminerai peut-être pour dire, faire référence à certaines initiatives du régulateur donc, des marchés financiers en Afrique de l'Ouest, donc le CREPMEF, et en même temps de la Banque centrale. La Banque centrale qui a mis en place un dispositif pour appuyer les PME, notamment avec des facilités de refinancement pour les banques dans ce processus justement d'appui aux PME. Nous pensons que cette piste pourrait être davantage explorée et approfondie justement sur la question du risque que représentent justement ces PME ou du risque climatique. Parce que le risque climatique, c'est l'appréciation du risque climatique et sa prise en compte pourrait aller avec l'implication plus grande donc, de la Banque centrale comme du régulateur, donc le CREPMEF, qui a déjà mis en place un certain nombre de lignes directrices sur justement les outils de financement par les marchés de capitaux des activités vertes et la prise en compte justement de ces risques à ces niveaux-là, la prise en compte dans les lignes directrices de la Banque centrale comme justement de l'autorité de régulation, le CREPMEF, pourrait à notre avis accélérer donc, la prise en compte et l'intégration et les solutions qui sont liées donc, aux risques climatiques pour l'accès au crédit et le financement des différents acteurs de l'économie et en particulier des PME. Je vous remercie.
Thank you, Mark. Thanks a lot for your nice presentation. And we have a couple of questions here, also with regards to the tool, but I think to now explain the methodology behind such a tool is perhaps a bit too far taken. So if perhaps we could take an answer to this in writing and then share also after, I think that would be very good. There were a couple of other questions also to the EIB, and I have seen that now in the chat, Jane has already shared a link and also provided there some information on additional support options from the EIB. So I have an interesting question here, a very long one additionally, to perhaps also back to you, Gerhard, if you don't mind. If we now start looking at all those risks, right, and we have been speaking because it is, of course, a challenge specifically also in many of the African countries, but also for us, we are now looking into this agri-food sector, and then we know the risks, and we understand it's very risky. So how should banks now really react to this? If we have seen a couple of tools, right? Herman and Mark have spoken about like different response possibilities, but isn't this also the risk that we stop just financing the sector in the end of the day, and there is a lack of capital even more than it is now? What would you suggest in this situation?
That is a wonderful question, and it is also a very fundamental question. should we starve the sectors that need to transition into the low carbon economy, carbon intensive sectors, but also those sectors that are very vulnerable to physical climate risks? Should we starve them from capital just to make sure that the bank's balance sheet remains crispy clean and decarbonized and risk-free? And I think that is a really fundamental question. My wholeheartedly answer to that would be don't. What you should be doing rather is engaging with your clients. So engage with those carbon intensive sectors, give them more capital, but on the condition that they draw up transition plans so they can transition into the low carbon economy. And for all those agricultural clients that Mark and Herman also described that are at risk from climate change, don't walk away from them, but engage with them and go armed with your data in your solutions. And Herman already listed a whole bunch of possible technical solutions and say, do this. We can help you. We can supply the capital. Because if we don't do that, we will only, in the long run, amplify these risks, right? If we don't provide capital to the carbon-intensive economies, and we only start to finance renewable energy, that's fantastic, all well and done, but then we're building a clean economy on top of a dirty one. It does not make any sense in the long run. So engage, engage, engage.
Thank you. Thank you, Gerhard. And then perhaps in this conjunction to you, Herman, first, you spoken with those smallholder farmers and Gerhard says engage, right? Are they actually aware of all those options which are out there? Also specifically then here, the smallholder farmers, we have here many MFIs also listening to us who were wondering, okay, what exactly we have also available, right? Can we offer insurances? Is that something what is really covered also by the sector actually?
Yeah, that's great. The thing is that when we go into the fields and you make all the assessments related to the climate impact and so on, we can already see how smallholder farmers already perceive the impacts of the climate change and vulnerability to their daily work. And they have already started implementing, I would say, their own indigenous technical approach to adapt. And most of the time when it comes to the institutional framework that could support the farmers, we have seen that most of the time there is a very big lack, a very big gap that farmers requiring to know exactly the knowledge. They know, for instance, that agroforestry, for instance, is a very traditional practices, integrating traits to the farms and mixed with livestock and so on. But we have some research that provide more in-depth combination of the trees and the crops that farmers maybe do not have access. And I think it will be the role from the financial institutions making also the support from the extension services to really support the farmers on the ground to strengthen their adaptive capacity. So I think they already perceive the impact. They have started working on how to address, but they're still lacking, support from the institutional parts.
Thank you. And Mark, in this sense, perhaps also because you have this tool there, right, which kind of starts sorting the clients. And there was one question, first of all, why is this only for green clients? I don't know if that was perhaps a misunderstanding. So what is here really at stake, and to which extent can then really this help also the institutions to provide the right financial means, perhaps?
Yes. Okay. Thank you, Karina. Why the green SMEs? The idea is that within the transition we are in, today, the activities, the economy of tomorrow will not be the same of today. We consider that within this transition, you have a kind of forefront runners. And the forefront runners are the one, first of all, who are developing and deploying the technology, the green technologies. And the more they will be supported and the faster the transition will be done. You also have the SMEs who are using these technologies. Most of them, they want to reduce their costs, but they also want to have a more sustainable perspective. And this is why we consider that if we take these block of green SMEs as a front runner group, then we have the opportunity, first of all, to accelerate the transition, but also to have a good and better understanding of the climate risks and of the mitigation of these risks. Because at the end of the day, when you're talking about this climate risk, it's also talking about the climate sectors and the climate activities within these sectors.
Thank you.
This is, okay.
Yeah, thank you, Mark. And I'm very sorry. Unfortunately, our time is up for this webinar. There are a couple of more questions, and we will try to address those later if we haven't been able to answer those yet. And with this, I think I would hand over to Hugues for the closing remarks of this very nice session. Thanks a lot from my end to our nice panelists, to you, Jane, as well, for all this super interesting inputs. And I think it has really broadened also the horizon of what there is all already available. So thank you very much from my end. Over to you, please.
Okay, thank you very much, Karina. It has been a very enlightening sessions. We learned a lot. I don't think, as usual in terms of tech, I will be summarizing some of the key points. What I'm actually taking out is simply that we need more time if we want to do justice to such a topic. There are a lot of questions that are related, like the methodologies and the approaches. So maybe it's something that we need to discuss amongst us, between us, and find a way maybe of maybe having another session where we can really go in depth into the topic. I would just say that improving the understanding of climate-related risk to support the drive towards climate resilient and low carbon development of the continent, it's actually essential for climate to achieve really and climate change on the continent, really to address the challenges that are related. And we in Making Finance Work for Africa will continue to take a more proactive approaches to promoting this agenda through our advocacy and knowledge management activity. On that, I will reiterate our thanks to our panelists of today for their contributions. There was a lot of insight and also a lot of feedback that we got from the audience. I'd like to thank our moderator for the good work, the management of these discussions. We had more than 215 attendees at one point in time during the sessions, and they came from diverse backgrounds: banking, insurance, development finance, a lot of them. This is actually a good testimony to the interest that the financial sector has for this topic. But even beyond, because we had people that were raising a lot of questions related to agriculture, I will just end by saying that we'll make available the recording of these sessions in the course of next week. You have the recordings and also the presentations. As the moderator rightly said, we will try to see how we can collect some of the questions and probably provide responses that we share afterwards with the audience. On that, I will also invite you just to fill in the questionnaire that will pop up at the end when you leave the platform. It will pop up automatically, and we thank you because we really value your feedback. Thank you again. Have a good day, and see you next time. Bye-bye.
Thank you.
Thank you.
Thank you.
Thank you.
Bye.